Hello and welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. Today I'm joined by Kevin Murphy, the CEO of Ferguson, a global leader in HVAC, piping, and a number of other critical industries, not only for residential housing, but also for industrial production and for data centers. Kevin, thanks for joining us.
Thank you for having me, Frank. Great to be with you again.
All right. Kevin, we got to talk about the news a bit here. Government shutdown just started at midnight on Wednesday. Does that have an impact on your business or the business of some of your critical customers?
Yeah, Frank, we're one day in, and so it's early days. But generally speaking, the strength of our business today should be largely unaffected. It's private capital construction projects, large capital construction projects like data centers, pharmaceutical production, chip manufacturing, biotechnology. And so those projects should continue to press on. And that's been really the source of growth and outperformance for us.
One growth driver of your business has been the increase in domestic production, whether it's nearshoring, data centers, et cetera. Does some of the political unrest, does that impact some of the confidence of maybe foreign companies to come to the U.S. and build that might be potential customers of yours?
What we've seen right now really has been a renaissance in production here in the U.S. Again, large projects, data center activity, we see that ramping up. That's still in a growth phase. We see biotechnology and pharma projects being started. We still see chip manufacturing continuing to ramp up. And you're right, we do see some onshoring and reshoring continuing as people want to bring their supply chains closer to the United States, whether that be tariff impacts or just what we experienced in a post-pandemic supply chain crisis environment. So we still see that growing. We think we're in somewhat of early innings in that production as we go forward.
All right. Want to get more granular in your business. I want to ask you one other macro question. We saw a federal rate cut in September. A lot of people are expecting another one in October this month. What does that mean for your business? We've heard a lot from the National Association of Manufacturers about the need for rate cuts, in addition to the Trump tax and spending bill to kind of spur industrial manufacturing. As you and I were talking about actually off camera, people really associate your business with residential construction, but you have a very broad-based, as you were just outlining, industrial manufacturing business as well.
Yeah, we would see a rate impact on both sides of our house, the non-residential space as well as the residential space. And on the non-residential space, especially when you think about what's going to happen in, call it hospitality and even multifamily construction, which kind of bridges over to the residential space. But certainly we could use some degree of rate reduction on the 30-year mortgage. That's more tied to the long end of the curve, of course, but we'd love to see that come down to get at some housing affordability, because we're at historically low levels of existing home turnover, existing home sales. And that's a key driver of remodel activity, which is a big part of our business. But additionally, just getting after building more housing in the United States. We have a deficit of, call it 3 to 5 million units of housing in this country. And we need to get after building those houses in order to get after further affordability.
All right. I want to put you on the spot a bit here. We've heard a lot of CEOs kind of give us a number that they think unlocks liquidity in the housing market. I think you have your finger on the pulse of the housing market, probably a lot better than a lot of CEOs do, simply because if you're going to build a house, you need piping, you need HVAC, you certainly need plumbing. Is there a number for mortgage rates that you think really unlocks growth in that side of your house?
Certainly, everybody talks about a 5 handle on mortgage rates and getting sub 6 to start to trigger some activity. But I think we've come accustomed to the fact that we're going to have slightly higher mortgage rates than we have had, call it leading up to the recent rate hikes that we have seen. But if you look overall at affordability, it's not just rate. We've got to get after some of the things that are happening in the local markets to make housing more affordable from a production perspective. And then we, every day, are working to make the trade professionals that are building these houses more productive. That's what our associates wake up and try to do every day. How can we make their jobs more productive and make housing construction more affordable?
All right. I want to move on to another part of your business. You were talking about data center construction. So we've seen a lot of mixed reports. We've seen a report from Bain that came out about a week or so or 2 weeks ago saying that the AI build-out is going to fall short of revenue coming up as soon as 2030. We've heard other people concerned about a bubble. Just when it comes to the construction of these data centers, where obviously you do a lot of critical infrastructure for them, what are you seeing when it comes to the build out? Is the speed and the growth of this build out, is it slowing down at all in your mind? Or are you seeing a continuing acceleration?
The short answer is we're seeing a continued acceleration. And you're right, we're involved in everything from the underground water transmission that goes into these data centers, the commercial mechanical piping systems that are cooling these data centers, the industrial valve product, and the fire suppression. And our open order volumes continue to grow. Our bidding activity continues to grow. And so we still see a runway for this expansion. And for us, as we indicated earlier, it's a bit more than even just data centers. It's large capital construction projects in the U.S. that are driving this growth. And so when we look at those projects that are north of $400 million in overall construction value, the top of that funnel, if you will, that'll continue to come down into construction activity and ultimately shipments, we see that continuing to build at this time.
Is that in part due to the Trump tax and spending bill, or is that a tailwind that's kind of separate from that legislation? Because we heard a lot of people talk about a growth in CapEx due to the bill and also the benefit of bonus depreciation.
We certainly see some tailwinds as it relates to the bill, but when you look at some of the overall drivers, the growth in AI is driving data center construction that continues to build out. What we're seeing with, again, not just tariff implications, but also just the hangover from the original, supply chain chaos that we experienced post-pandemic and what it means to bring supply chains closer to U.S. soil. And then the general growth. We're seeing good growth inside of GLP-1 production on the pharma side of the world as that market continues to accelerate. And the good news is we're part of that, and we think it's really healthy for America, and it's something that makes our associates incredibly proud to be a part of every day.
One thing we've heard a lot about is also when it comes to manufacturing, whether it's construction, whether it's residential or industrial, is a worker shortage. Does that worker shortage impact your business? Because if someone doesn't have the labor supply they need, it's hard for them to order the other goods that they need to build something.
We're passionate about it as a company. Yes, these are our customers. And we need to make sure that as retirements continue to accelerate in the trades specifically, that we have young people joining the trades, because it's a great place to earn a living. It's a great place to make a career. It's a great place to become an entrepreneur. And so that's really a cornerstone of our, what we call Ferguson Cares, our philanthropic portion of our business, where we're out at the grassroots level and at the corporate level, really trying to encourage and develop the trades and that pipeline of the trades. But as I said earlier, one of the key values that we drive inside this company is we wake up every day to make them more productive in what they're doing, so that shortage doesn't inhibit and allow us to decelerate from a growth perspective on the building trades.
Kevin, I want to pull on a thread from your earnings call. You talked a bit about M&A. When we're talking about mergers and acquisitions, or it sounds like more acquisitions, what are you looking at to add to your business?
And so in our landscape, and we're a $30 billion revenue company inside a $340 billion overall market, about half residential, half non-residential, as you indicated earlier. And our competitive landscape, we compete with roughly 10,000 small to medium-sized businesses every day. And they are very good competition, but we also want to be a great succession plan for them when they look to sell their business. And so that pipeline of companies that are looking to take that next step in their succession planning oftentimes are great additions to our company. And it gives us roughly 1 to 3% annual revenue growth a year through really consolidating this industry and helping to drive those succession plans for independent owners. And that's healthy.
All right. Kevin Murphy, CEO of Ferguson, really great to talk to you as always. Thank you very much for your time and your insight.